Welcome back to my final daily report market video with me, Richard Perry, market analyst at Hantec on Monday the 8th of July. Let's look at this wild ride that is gold. Gold has been, if you just took the last 2 odd weeks as a snapshot, it has been incredibly volatile. You've seen the average true range actually increasing to 24 bucks, which is the most in about 3 years. But if you look in the past 2 weeks, for example, apart from this decisive, strong, positive candle last Monday or Tuesday, you haven't really got any positive candles at all, really, and that hints at certainly the market being a little bit corrected from 1439, the failure at 1436 being last week's high. And you look at these momentum indicators, look at that. MACD, bear cross. Stochastics, bear cross and starting to fall away. RSI, if that goes below 60, this would all suggest that the market is turning more corrective, although it hasn't yet come through in the fact that you've still got, arguably still got that uptrend intact, although to be honest, a couple of intraday breaches of that really do question the validity of this recovery uptrend. But you are holding on to that basis of support on a closing level around 1400, which again is around the 23.6% fib level. So this 1400 mark I would take as a bit of a gauge now. I think if you start to close below 1400 and start to sort of drift off, then I think that means the market is turning corrective. I think whilst that 1381.50 support is intact, you're not going to see too much of a decisive move to the downside, but if you do lose that reaction low, 1381.50, you could quite quickly see it around 1350. That old breakout of 1348, which is a basis of support around the 50% fib level. So you could quite quickly see that coming if it were to be broken. And again, you've got the 21-day moving average, which on gold is not necessarily the best moving average to look out for, but still is a gauge on the near-term outlook. And breaching that again would turn the market more corrective on a near to medium-term basis. But for now, you're still chopping around. Again, Friday's session was decisively lower, but also pretty volatile nonetheless, and actually closed, what, 14 bucks off the low. So it just goes to show that there is still a lot of volatility in this gold price still. So how the market really performs in the coming days is going to be interesting. 1400 bucks, as I said, is a bit of a gauge, as is 1410. That a little bit of a reaction low in the last 2 days, comes overhead supply on the rebound, and just failing to move above that 1410 mark today could be a bit of an indication. You've got the momentum indicators on the hourly a little bit more correctively configured as well. So yeah, this is still quite a significant degree of uncertainty surrounding gold. On a near-term basis, I would still look at medium-term corrections as a chance to buy though. So with that in mind, I wish you good luck in your trading on gold and across all the charts that we've talked about today. And I will speak to you again tomorrow.